Hello everyone and welcome to the new market weather bulletin. Today is Monday 19th of January, so perfect time to check the Bitcoin chart, form some bias, map some level, and more importantly try to develop some trade plan for the week ahead. As always, big shout out to Blofin for sponsoring this video. Blofin is a super cool exchange, non KYC, so you can join just with an email address by linking the referral link on the description below. You will be eligible for a 20% discount on fees lifetime, and also you will be able to participate to all the cool campaign we run with the team to boost your trading experience. So do not wait further, and before the video starts, make sure to join Blofin by clicking on the referral link down below. Also, before moving to the chart, last homework, make sure to subscribe to the channel, leave a comment and a like, so I will know that you have enjoyed this content. But without further ado, let's move to the Bitcoin chart and see if we can make some sense of what is happening. Actually, over the past 24 hours, we had some interesting development, but as always, a very brief high time frame view. A few considerations. So we know that we are potentially still in a uptrend. So we are ranging here since long time. So I'll make this pretty straightforward because I mentioned this so many times. We are more or less still in this uptrend with this higher low potentially be formed on high time frame. Just I have wrote a few times, the way this low has been forming to me is not convincing. As you can see, all the previous lows has been formed by sweeping the lows, but this one, no, as you can see, it has a completely different characteristic. So somehow I have a sort of expectation, not sure is the right terms, that sooner or later all these lows, unswept lows or poor lows will be taken out. So on a very high time frame, I do not see reason at this stage to see this being an higher low that will bring us to a fresh higher high on high time frame. So on let's say high time frame, I still this potentially as a area where we can get a bounce for a further move down. Also structure wise, we have this weird price action that we have here, where an high was formed, as you can see, a low was formed before a fresh high. So technically here on the daily, the market structure was broken. So somehow for the first time since 2023, something that is happening since October, November is different than the dips or the high time frame higher low we had here formed before the next leg up. So I'm treating this on high time frame still as a potential area for a relief bounce, meaning a potential move up for a lower high somewhere here, then we can see the level before a further move down. And let's say one of the main reasons, then there is also other reason, is the way we are trading at this level comparing to the way we have been trading all the other time we have been forming a high time frame higher low before following higher high. So structurally, we know, range-wise, we know that more or less, this is not making it precise, but just to give you an idea, that we are more or less back in this range. We have been trading in since November 2024, so more than a year. We had a deviation on the top of this range, we have a deviation on the bottom of the range. Now this weird price action is allowing us to see objectively that we are somehow back inside this range with what appears to be a bullish structure here locally. If we want to have a little bit more objective way of selecting this range, I would start here from the beginning of the consolidation. I'll take all the range. You can see that we are back inside, and that actually we kind of bounce exactly from value area low. So still some reason, both structurally and range-wise, to see the price to move a little bit higher. This is very high time frame view. There is also another point that I forget sometime to point out, is the fact on the daily time frame, the fact that RSI is for the first time since October, so since we started downtrending, the RSI daily is above the 50 level. So being above the 50 level, somehow it gave us some more confidence potentially on long exposure, but again, it's just an indicator, so we do not fully base let's say, our analysis just for this. But I think it's something to keep in our mind, that something has changed on RSI for the very first time since we lost the daily 50 RSI exactly on 10 of October, when you see we break down below, and then it started to be resistance, flipped, support, and now we are still above it. I believe we are still above also the 12 hours, so still holding here. This can be used. It's not so clean as you can see as the daily, the 50 level, this level here, but it can be used a little bit as a momentum. For sure, if we lose the daily first, we will not the daily 50 level, we will need to lose it first on the 12 hours. So it's something you can keep monitoring, especially because we are just there. Remember, RSI counts only after the candle closure. So whatever you see while the candle is development can be quickly erased by the candle closure, because RSI takes in consideration just the candle closure and opening, not the wicks. So with all this, let's say, explanation on a time frame, I have to admit that locally I'm starting to have some trouble to judge this price action we had since early November. So I'll try to tell you what I see objectively, and objectively I see a downtrend that has been stopped. So since October 10 we had this clear downtrend where structure was without any doubt downtrending, so bearish market structure with a series of lower lows followed by lower highs. As you can see, more or less this one. This structure at mid of November started to change. So we stopped to go down and we start to go apparently laterally. So you would say, okay, Popeye, this is your kingdom. We started to go laterally, so means we started to range. So we apply a simple range mentality. And we are very happy, and everything goes according to our plan. And this is more or less the feeling, the approach I had in the market for the first week of this lateral price action. Now there is a couple of issues that makes me a little bit more skeptical about this lateral price action, and to show it, what I have in the back of my mind very quickly is more or less the fact that this doesn't look really like a range, at least for now, but it looks like more, I don't know, a triangle, an ascending triangle. I don't trade pattern, but it looks something more like this, as you can see. Mainly because the lower part of this range, that was the one that I show you, that would potentially be this, as you can see, the lower part of the range was never traded, at least so far. So this doesn't mean, as I said at the beginning, that these lows are safe, that they will never trade below here, and these will break above and we will trade higher and higher. But the fact that this range is a little bit weird makes me cautious. I'm reaching to the point I want to explain you. Makes me a little bit cautious to do one specific thing that I do in all the range, and is to call this a bearish deviation. So normally in a range, whenever we see a range that is broken to the above, let's make a needle range like the one we are here, coming from a downtrend, starting to bounce, price find acceptance above, we deviate somehow, we do something strange like this, we call the deviation, we expect the price to go to the other part, we get another deviation, and we play this range more or less like this. Sorry, the deviation would be more something like this. Something like this, and we would say, okay, this is a deviation, we go down, blah, 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 blah. But the point of this range being weird makes me a little bit more careful on calling this a deviation. And I'll try to go, to continue to bring it to the point that what I'm seeing. What is the problem of this range? Mainly two. The first one, we haven't traded much on the lower band of this range. So it makes me feel and position myself a little bit careful on this being a range. And the second is the fact that normally in a range the market structure should not be relevant because we are ranging. So market can do three things, correct? This is always back to basic. Market can either uptrend, and if it's uptrending we are not ranging, at least in this time frame, but we are going up. It can downtrend, and in this case we are not ranging, we are downtrending, or can range. So whenever we range, there is not a market structure. So we go sideways, we go laterally. So means we are not trending. If we are not trending, there should not be a clear market structure. And so far, then everything can change, everything can go south in another way. So far, here there is a structure, especially from here. There is a clear structure. Price is trending, at least on this channel, price is trending. Or if you want to go in higher time frame, price is trending like this. Okay, so this is a trend locally. Now, this trend is still intact because we made an high here, we made a low here, we made an high here, and we are still sorry, potentially in this local uptrend. So here the usual dilemma is where comes and start to make a collision. Is it a range and we are deviating back inside this range because this is a deviation and we are back below range high or value area high? Let's select this before the breakout. Yeah, and this would be, as you can see, we are back below value area high, that is that level there. Or this is a trend and we are still uptrending because we didn't broke the structure. The funny part is I have absolutely no idea. Okay, this is a place where to me there is no a resolution, let's say. And positioning wise, I do not have data or I do not have information from the market that allow me to exclude one or the other. So what does it mean? That I can still see the uptrend, and I can also see the range deviation because we are back below range high. So you would ask yourself, so what you do? Basically, as you know, I'm already long from around this level, and as I explained a few times last week, as long as we hold this demand here, and as long we hold more or less this, I think, Fibonacci here, that as you can see is more or less been tested. You can also make it more aggressive from here, but probably the real low was this one, so this is the leg up. So as long as this level holds, I'm more keen to see this as a trend, because as you can see, price moved up from this demand that we had here, gave a leg up, tested, another leg up. So just being super stupid and lowering my EQ, this could be simply the same as we did here before this move up, and could simply go be still uptrending higher. Let me see if I'm forgetting something here. So when this thesis of the uptrend would be invalidated, simply put, from a super technical standpoint, when this is broken, okay, because this was the last low before this little consolidation followed by the expansion. But if you want to be a little bit more skeptical, let's say, all this area is starting to be important to hold. So if we start to go down, lose demand, blah, 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 then probably this is going to be broken. So my line in the sand more or less become this at around 89 and 90K. So as long as here it holds, I will not call this, personally, this is my approach. Not I'm just trying to give myself rules, not saying this is absolutely the only way to approach this. So as long as we hold this level here, I will still be in the camp of this being a market structure break, a bullish market structure, and potentially an higher low as the one we had there, bringing us higher, and then we will see higher. Should this break, then I will say, okay, this market structure has been finally broken, the range is fully back in effect, I'll try to short and retest to go down. Also because if we start to take out lows, then I would be pretty confident, or pretty I would see this as something pretty possible, that we start to take then all these lows that are the lows that we saw at the beginning of the video, where these lows, this high time frame market structure is not looking like this, but is looking like this, and we know that usually nothing is certain. These low here are potentially not safe for something like this, and then a move higher. So while I keep looking at this potential market structure here that is following, I would not be surprised. Let's say I would probably be stopped out. That is a bit different. If we start to break here down below and start to take down all these lows here. But until this level hold, I can still see this move being a bullish move to bring us the price a bit higher. How much higher? Now we will see it, but should you take any trade on my suggestion here in YouTube or on X, always make sure to do it with me on Blofin. You will find the referral link down in the description below to enjoy a 20% discount on trading fees for the lifetime, and also to be eligible for all the cool campaign we run with the Blofin team. So Blofin is a super cool exchange with a lot of liquidity and a super cool interface, very simple to use, and also is non-KYC, so no need to share any of your personal information to join the exchange. Just need an email address and you can trade with a full privacy on the platform. So do not wait further, just join Blofin using the referral link on the description below. So we know that we are in a junction here, range or trend or range. We have defined the level that will be the line of the sand for us, or at least for me. Then I do me, you do you, whatever you want. You can do whatever you want, but I have defined this 89K as the line of the sand for me to steal, sorry, it's Monday for everybody, also for me. I put this line on the sand to still give priority to this local uptrend comparing to the range and the potential range deviation. So the uptrend that we can see here. So as long as this 89 is not invalidated, this is the way I would see it. Should be 89 be invalidated, then we say we accept the fact that the price have deviated back inside the range, that this was a bearish deviation, and we would expect a full retrace inside the range to mid-range and to range low, and we would expect all these poor lows to be taken out. But until then, I stay in the camp that can happen in 1 hour that this low has been taken, on the camp of this move. Where this move, where I would see the big trouble area of this move, clearly in this support and resistance level, that is a big wide area, that is more or less this level here. Let me be a little bit, yes, this one, and this move here to the more or less 100k level, to me would be a reasonable level for a relief bounce, so a bearish retest of a flipped level. As you can see, this place was support for a long time, support, held, finally when this level was broken, we fully established the downtrend, fully confirmed the downtrend, and since we are in a local downtrend, since a support level was broken, now to have a very simple and objective approach, this would be the first level, the first big trouble area for any relief bounce. So should this low be formed at around this level, to me, this is the first big trouble area, would be a bearish retest of a flipped level at around 103k, and this would be the area where I would be interested to short again. I think we can probably draw some fibs from some of this level, you see, and also this, that is the last leg down. The last leg down, considering this structure here, structure, this is the last lower high, lower high, this is the last lower low. So in this structure here, the 0.75 level is exactly here at this 100k. So rejecting here would confirm this higher time frame bearish structure. So with all this consideration, bias and confusion we have at this level, just sharing the few trade setup that can come to my mind. So I'm already long from more or less this level, but as always, we have a demand, we have a breaking structure here, we have a bullish structure break. So purely trending based on this trend, any long here would have a clear setup, let's say. That is this one. So we have the 0.75, we have demand. I think we also have the 4-hour trend. That is a pretty reliable trend just there. As you can see, we are tapping this trend. This trend was resistance, flipped, retested one time, bounced, retested another time. It could now become support. So we had some confluence with the trend, with the demand area that this is block here. Sorry. The 0.75 level that is here. So anything here could bring us for the next leg up of this structure that we see here. So this is the first possibility for a long. That is more or less around the current price, and is a position that could have been filled also overnight, and this one. The scenarios for the shorts are two, and the first one is this one: break the structure as we say, wait for a rebounce, and then trade down below. The exact trend setup here will be needed to be developed according to where the low is printed here, barely to make some estimation of the Fibonacci supply and this kind of stuff, but it's something that potentially could look something like this, even lower to take also this low, but more or less break the structure bearishly, fully accept the fact that the price has deviated back inside the range. Since we are back inside the range, we try to short as close as possible to range high premium price, and we would expect after the bearish deviation a visit to mid-range and range low. So this is the second option for the short, just after this bearish market structure break. And last but not least, we said that should the price move higher as, let's say, the first long option, so this would be, let's say, a consequence of the first option. Should the price move higher, we know that the 0.75 is there, we know that there is a support resistance level on this gray box, we know that somewhere here there is a supply, so any move here would be interesting for a short. Also because if you note, let me clean a little bit the chart, if you note, if we go higher there, we have 1, 2, so it will be 1, 2, 3. So we would have a clear 3 drive into supply, high time frame resistance, and so on. So here we could trigger a short to take out all these lows. This would look more or less to be defined better when the market structure develop as a swing short. That would look something like this, potentially with some bearish divergency on RSI, 12 hours probably already starting to shape here, as you can see. 4 hours probably is too lower time frame, so to trade with these 3 drives that we have here, along with a bearish divergency somewhere here. And this would be the high time frame area of interest for a swing short, not just based on this local range, but based on a much wider price action that is the one that we are having here. So to make a super quick sum up, very conflicting area in terms of range and trend. This one, I see more the trend as long as it's not broken below 89. So since at this specific moment, then everything can change, the trend looks more clear. Still holding my long from here, and could potentially understand the fact that somebody want to long also this level for a move down up there. This long will be invalidated should 89k be broken. In that case, we would get out from the long, flip short, wait for a retest and a move down below. Should the long scenario continue to play, the area for short would be at around 100 to 2k. So more or less this is the way for me to move forward on the week. Hold the long as 89 hold, and if it holds and we move higher, more interested in shorting at higher price 100 and 102k. Will flip the bias, the one related to the trend. Should 89k be lost, then we will open absolutely the door for all this low to be taken, so potentially to flip short and to be filled in a short on a retest. So very interesting level, absolutely a level to pay attention to see who will win within the trend or the range. So let me know what you think in the leave comment below which camp are you, more trend or more range, but also make sure to trade with me on Blofin using the referral link down in the description below, and make sure to subscribe, to leave a comment and a like, and ask me any question here on YouTube, so I will try my best to clarify any doubt that you have. As always, stay safe out there, and make sure to tune in on the next one. Bye!